Ever seen those crazy scenes of stock traders yelling, followed by a sea of red on your screen? It's a market crash. Scary, right? But what if I told you there are signs, like whispers before the storm, that can help you see it coming? Today, we're diving into the key indicators that could signal a market crash is on the horizon, so you can be prepared, not panicked. First up, let's talk about valuation. Think of it like checking the price tag on something. Is it a fair price, or is it ridiculously expensive? A key tool here is the forward price-to-earnings ratio, or PE ratio. This measures a company's current share price relative to its expected future earnings. Historically, when this number gets really high, it's a warning sign. Before the crashes in 2007 and 2020, the forward PE ratio for the S&P 500 soared to levels way above its historical average. It's like the market is paying a huge premium based on hype, not reality. Another powerful tool is the Buffett indicator, named after the legendary investor Warren Buffett. It's simple. You take the total value of all stocks in the market and divide it by the country, SGDP. Buffett himself said that if this ratio gets into the 140% range, you're playing with fire. It suggests the stock market has grown way too big and fast compared to the actual economy. When you see this indicator flashing red, it's a major signal that stocks are overvalued and a correction could be near. Next, let's look at the human element, market sentiment. When everyone and their dog is quitting their job to become a day trader and bragging about their crypto gains at parties, that's a red flag. This widespread euphoria, this feeling that stocks can only go up, is often a classic sign of a bubble. Remember, when there's extreme greed, it's time to be fearful. Tools like the CNN Fear and Greed Index can be incredibly useful here. When it's maxed out on extreme greed, it means investors are too optimistic, and the market could be due for a sharp reversal. Similarly, the American Association of Individual Investors, or AAI, sentiment survey can act as a contrarian signal. When individual investors are overwhelmingly bullish, big market downturns often follow. Finally, we have the technical and economic signals. The tremors before the earthquake. One thing to watch is volatility. A healthy market moves up and down in a relatively calm manner. But when you start seeing wild, rapid price swings and huge single-day drops in major indexes like the S&P 500, it signals instability and fear creeping in. Think of it like a ship being tossed around in a storm. These are not normal market movements. They are signs of deep-seated anxiety. There is also a more complex technical indicator with a very dramatic name, the Hindenburg omen. It's not foolproof, but when it appears, it's worth paying attention. It triggers when a specific set of technical conditions align, essentially showing a market that is internally fractured. A large number of stocks are hitting new 52-week highs, while a similarly large number are hitting new 52-week lows. This internal divergence suggests a lack of uniform strength and an unhealthy, unstable market. It's like an army where half the soldiers are charging forward and the other half are retreating. That's a recipe for chaos. So, how do you put this all together? It's not about one single indicator. It's about the combination. When you see sky-high valuations like a crazy forward PE or a Buffett indicator in the danger zone, coupled with extreme optimism where everyone thinks they're a genius investor, and topped off with technical tremors like wild volatility or a Hindenburg omen sighting, that is when the alarm bells should be ringing loud and clear. Spotting these signs doesn't mean you should panic and sell everything. It means it's time to be smart. Stay rational, review your portfolio, maybe take some profits off the table, and most importantly, consult with a financial advisor. Being aware of the red zones is your best defense against getting caught in a market storm. Thanks for watching. If you found this helpful, give this video a like and hit that subscribe button for more insights to help you navigate the world of finance. Stay safe and invest wisely.